Hey everyone, welcome back to the investing channel. For today's video, I wanted to spend some time talking about investment outlook from Wall Street because a lot of investors are spending their time asking, hey, what stock is going to go up next? For us, it's important to understand from the institutional investors, from their point of view of what forces will actually shape returns over the next couple of years, right? So we need to really embrace this mindset from Wall Street as a retail investor and put on their hat as well, right? So walking through some of the key major themes that they are positioning around will also guide us into our investment decisions for 2026 and beyond. Okay. So everything here that I'm doing and explaining is not a buy this stock video. I'm not asking you to buy any of the stocks, but what I'm just showing you is a little bit of framework and some of the guiding principles, right? Because when you understand where big money flows to, right, then the market stop being random. So let's look at the big picture. So the big picture is that over the past few years, the stock market's returns were very concentrated. Okay. So they were all driven by a small group of large technology companies. In 2026, the consensus over here is that that concentration should ease. It's not because technology is disappearing or AI is not real. It's a hype, but it's because of the fact that we now need to move from AI being a hype towards really generating earnings and monetization. So a lot of focus on AI agents, enterprise solutions, for example, in this regard. Power infrastructure becomes very important because you need power to run AI. More sectors that is contributing to growth and a lot of risk and resilience, right? So this is the different themes that's happening for 2026. And we'll go through them in detail, right? So for the first theme, that is on monetization and a return on investment, ROI. So first phase of AI was really about building the building blocks, the foundation. You had companies spending so much money on chips, data centers, algorithms, models, etc., etc. But in 2026, what is changing is that investors are no longer asking and saying questions that, hey, this is very impressive. They're starting to say, what's the application, right? How useful is this AI? Is the AI really doing something to the income statement and the bottom line of the company? Is it helping to reduce costs? Does it improve workers' productivity? Is there any margin expansion, for example? So AI is going to move, right, uh, from a capital spending story to how are we going to leverage it, right? Instead of being sold like separate products, right, AI is going to be embedded into workflows and improving results for the business. And this is important because the markets are starting to stop paying for potential, right? A lot of the hype was generated in the last few years. Now I want to pay for outcome. I want to see tangible outcomes, tangible ROI. So AI is not disappearing, but investors need to be more disciplined, right? It needs to be investing in businesses that are proven track record, that there is a return on investment through using artificial intelligence. And as a result, because of this, you now have a AI scaling that's in the market, and one constraint becomes very impossible to ignore, which is energy and electricity, right? So a lot of people underestimate how much physical power, how much energy and electricity is needed to power all these AI data centers, right? Data centers, they consume a lot of electricity, and a lot of the existing power grids were not built for this level and scale of demand. I think nobody really anticipated this high amount of demand. So 2026, even though as the AI adoption keeps accelerating in our different businesses, the power supply is being seen as a bottleneck, right? And when demand grows faster than supply, the infrastructure will start to matter again. So there's a lot of attention that's shifting towards reliable power generation, grid upgrades, transmission, having a lot of energy that's always long duration and always on. Right? So this energy becomes a very strategic infrastructure for every business. Okay. So in a nutshell, no power means no AI growth, right? And when something becomes a bottleneck, you can see money and capital flowing towards it, right? Because people are saying, hey, we need a solution here. Okay. So now that infrastructure investments and stuffs are picking up, something else is happening, which is theme number three, which is on the broadening, right? So the returns was led by all these mega cap tech stocks at the start, but as time passes, more parts of the economy should grow, right? Because if you look at the last few years, a lot of the market performance was very concentrated on a few names, right? These few technology companies were dominating the returns of the S&P 500 and the QQQ, for example, right? And that was because, there was high interest rates, capital was, expensive, investors were crowding into the safe big winners, right? The Magnificent Seven, for example. In 2026, you can see that the Fed is already cutting rates. Rates are starting to come down and rates are starting to stabilize. There's also a lot of corporate tax incentives that's being signed by President Trump. So because of all this, the earnings growth should be less concentrated. It should spread beyond tech into other sectors, right? And of course, doesn't mean that with this broadening, your big tech suddenly collapse, right? Big techs are still important. They're still growing, but other companies are starting to contribute too. Okay. And instead of having six stocks, seven stocks driving the returns, you can have dozens of stocks or hundreds of stocks driving returns, right? Small and mid caps companies, they stop lagging and more sectors are starting to participate. And this is very important because when the market broadens, investing will no longer become about, hey, owning the biggest names, right? It's more about, hey, look, there is shared growth that's being shared across the different industries and sectors. We need to select good businesses at a reasonable price. Okay, so the environment has changed a lot. On the fourth theme, then is on the piece on geopolitical fragmentation. Right. So globally, you guys know we are living in a very polarized world. The global economy is becoming more and more fragmented. Supply chains are becoming more regional, for example, and there's a lot of geopolitical tensions, right? They are still very high. And don't forget, there's also a lot of cybersecurity attacks that's been going on. So cyber threats are still constant. Okay. As a result of all this, governments, companies, they will definitely continue to spend on defense, national security, right? These are key themes that governments have no choice. Cybersecurity, protecting their key infrastructure, protecting data centers, for example, is no longer a cyclical thing. This is a structural spending that they need to do. Even if the economy slows down, companies and governments, they will have to invest in all this, right? So security is not optional over here, right? Security is mandatory, I would say. So when safety and resilience becomes priorities, you can expect capital flows and all this money to flows into industries that provide them. Okay. So this is the fourth theme that Wall Street is speaking about. And that brings us to the last theme. And this last theme, it's not new, right? It's on demographics. Right. And I think structural reality is that people are aging. We are all getting older. And as population age, it means that the healthcare demand will keep continuously rising. Right. You don't expect this trend to reverse. In fact, you expect this trend to continue to accelerate. And I think in the past there was a lot of this talk on obesity, right? A lot of crazy stories on one singular drug, on obesity drug, for example. So in 2026, what Wall Street is expecting is that investors will need to look at longer term treatment needs and innovation, not just in obesity, but innovation across multiple disease areas, like cardiology, for example, heart health, cancer. And healthcare becomes a more and more crucial and growth sector and a stabilizing force for us, right? And also with artificial intelligence now and AI, does it mean that our research models will be much faster? Can we halve the time for drug discovery? Can we actually treat drugs that were deemed as uncurable in the past? Right. And that's why you can see a lot of M&A activity as well by big pharma companies. Okay. So this is the last theme over here. So to wrap it up, I think I wanted to also look at some of the forecasts, right? And I was looking at three forecasts from Morgan Stanley, Goldman Sachs, and JP Morgan. So what is in common is that they're all expecting the S&P 500 to rise, right? Around 7,005 to 7,008. Of course, it's each of these institutions have their own forecast model, so of course their numbers are going to be different. But what matters is that you can see there is a consensus and clear messaging that they expect growth to continue. They expect the leadership to broaden. And the last one is that they expect, profits, right? No longer about AI hype, but AI as a application, AI as to reduce costs, AI to improve productivity, AI to increase earnings. Okay. Of course, this is, we will at the end of 2026, we can come back and track and see where we land across these targets. But the final takeaway here is that all these winning stocks over the next 3 years, the next 5 years, they don't happen by accident. Right? Normally, when you have this 10x stocks, 20x stocks, for example, there is a team, there's a long-term structural trend um, that is driving all these prices, of course, at sensible valuations, right? So I think positioning yourself way in advance, understanding what are the key themes, and changing your mindset is very important. Okay, so hopefully this video helps you guys to understand a bit better on the key themes. If you guys want to understand more in detail of all these key themes, I will try to put some of these links that I've gathered in the description box later. And thank you guys so much, and I appreciate it. And if you do enjoy this, help me to like and subscribe because it's very helpful and motivates me to make more video. Thank you.